Hello and welcome. Today we are going to talk about six advantages of having an LLC. Now there are more than six, but these are the highlights. So just if you're new here and you haven't been tuning into my videos, my name is Taylor Darcy from Think Legal. I help entrepreneurs, I help you create intentionally the business of your dreams. So welcome. I'm excited to talk about this today. I talk about LLCs a lot because they are really quite an amazing business entity. They are a hybrid of two different types of entities that really help businesses grow. And they are, generally speaking, not always, but generally speaking, very good fit for most businesses. Not every business, but most businesses. So if you have questions about this, make sure that you're seeking someone from your local area. If you're not local to California, please, they will give you better guidance based upon your locality. So the number one thing that, and although I number these, it's just more for organization's sake. It has so many pluses. I don't want you to think that this is just because I put it as number one, that it is the most important part of it, because these are all important parts of having an LLC. So it's more about the package deal than it is about the individual points that I'm trying to make. So just keep that in mind as we discuss that you shouldn't put any weight, more weight on one than the other. These are highlights, and depending on your needs, different things can change. So first and foremost, it gives you limited liability protection from creditors and judgments. Now, one of the big misnomers or misunderstandings about LLC is that a LLC does not give you limited liability. Okay. And it's very important that you understand that there are certain instances in which case that you do not get the benefit of the limited liability. And we're not going to go a ton into those, but just to give you kind of an idea is that anytime a business entity is used for fraud, or what's called the alter ego doctrine, which means you use it as like your personal piggy bank, or you hide assets from your business. So you need to run it like a business. It needs to look like a business. It needs to act like a business. It needs to perform like a business. It needs to be treated like a business in order for you to maintain that liability shield. And here's something that most people don't think about, is that no matter what, you are still liable for your own actions. So if you are a single member LLC and you do something negligently, then you can still be sued because it doesn't protect you from your own liability. It protects you mostly from third-party liability. So think employees, vendors, not you, anybody but you. It doesn't insulate you from your own liability in that respect. Typically. Now, there are some exceptions. We're not going to touch those, but just keep that in mind as you're forming an LLC, is that it's not as simple. All liability gets shifted to the LLC. It's a lot of liability is probably the best way of putting it, not all. The next reason advantage of having an LLC is that it gives your business some legitimacy. People take it more serious when you are running an LLC than you are a sole proprietor. It's just because you've gone through the steps to formalize your business entity. And in a lot of instances, that's very important for them to recognize that you're doing business. And it gives you that opportunity to say, yes, I'm starting a business. I'm not just here for the short term. I'm in it to win it, so to speak. So keep those types of thoughts in mind as you're forming an LLC, is that you don't want to, that as a sole proprietor, it's easier to go in and out of it because it's not a business entity, versus you have to actively work to keep up an LLC. Okay. The next advantage to having an LLC is that it makes the contract between the LLC and the other party, whether it be a vendor, whether it be a client, whatever it may be, they're now contractually responsible for it as opposed to you as an individual. So this is kind of like a subset of the liability protection, but it's more like a honed in detail, because now all of a sudden, if something does happen, then that contract goes to the LLC instead of to you as an individual, and that can be important depending on your business, especially. And so you really want to make sure that it's the right fit for you, and that you're using it appropriately. The next one, if you're planning on developing a business for the sake of selling it, selling a business when you're a sole proprietor is really actually quite difficult, because you can't sell yourself. There's no such thing as a sole proprietor ownership, but you can sell an LLC. So if you're looking at transferring the ownership from someone else, or from yourself to someone else, keep this in mind, that you want to start an LLC as soon as possible so that the assets and the client list and the branding and so many things go into that LLC instead of as to you as a person. So keep that in mind, that it's easier to transfer ownership. It's also called alienability. And by doing this, you're giving, you're saying, I value this potential transfer more than complete ownership or having all the rules that I play by myself. And so because it's easier, it's definitely an advantage for when, you spend years and years developing something, and now all of a sudden you want to retire. Well, it can be a real asset at that point, versus a sole proprietor is a lot harder to sell, than, and if not impossible. I mean, it's not impossible, but it's a lot harder to sell a sole proprietor business than it is to sell an LLC. It's really quite simple to sell an LLC, relatively speaking. The next thing that is important for an LLC, or an advantage, is it's easier to get investors. Kind of the same reason why you can't really sell a sole proprietor. You can't really get investors for, if this were the case, Taylor Darcy Inc., right? Or rather, no Inc. If it was just Taylor Darcy, it's hard to get investors because there's no ownership of you. It's just your ownership of the assets and the debts and liabilities. And so getting investors for a sole proprietor, you're pretty much limited to debt only and no equity whatsoever. So that's probably a big deal the bigger you want to get. If you want to stay small and you never want to get bigger than what you want, if for you it's just kind of better than having or not having it, it's better than having a job, and you're just doing it to maintain your status quo, then maybe you don't need investors. But at the same time, you need to consider that as a factor. If you want to get bigger, you may need investors, and you can't really do that as a sole proprietor, only debt really. And your debt options are a lot more limited as a sole proprietor. And finally, number 6, it's easier to run than a corporation. Corporation requires certain formalities, certain things. There's a lot of layers that go with it, between shareholders, board of directors, executives, that type of thing. And LLC removes some of those layers for you. So it's your membership interest, and then who runs the business. If it's a member, great, or it could be a manager-managed LLC as well. So it really cuts out on a lot of that extra stuff. Now, in some instances, those things are needed depending on your situation. So don't think that this is you want to make sure that this isn't a one-size-fits-all type advice. And so it's easier, and it's very flexible. An LLC is very flexible with tax benefits. It allows for what's called pass-through taxation. And it also allows for if what's called S Corporation tax designation. So either one. It's really quite like I was saying earlier, the perfect entity, if you will, for most businesses. It's a hybrid. It kind of combines the things between a partnership and a corporation. So if you've gotten value out of this video, please don't forget to hit subscribe and like, and don't forget to hit the bell button. We'll see you next time.